Welcome back. Hope you had a great weekend. First of all, I would like to apologize for my pathetic forecasting last week. I should have 100% seen the bounce coming because, we have been targeting the bottom of this trend line for a while. I don't know why I did not forecast that. But yeah, I'm sorry. But yeah, from this point on, right, there's honestly two potential paths. And number one, right, would be a continuation of the downtrend because this was great. We just had a algo trendline bounce and there's been no real follow through. So I would say that your first scenario is if this is a WXY, then we're potentially in an ABC in the Y wave, right? So in that case, right, we would have more downside to about 4050, 4000, then it has a bounce, right? Before it again comes back lower. So this is kind of what your WXY would kind of look like, right? In the bigger sell-off, that is if you are bearish before we even, start forecasting lower levels. The first thing to keep in mind is that we haven't broken the channel, right? So far, we're kind of just zigzagging across the channel. And we know for a fact that till the channel breaks, there is no real downtrend, right? So initially, right, when we were talking about downtrend targets, I also was showing you a wave 5, right? And I'm going to go back to putting that on the chart just because, it's not ruled out yet. I don't know why I removed that off the chart. And if I did have that on a chart, I probably would have forecasted that bounce. So yeah, I'm going to put the bull back on the chart just because I could see some merit, right? Merit left in it. And as you can see here, ideally, if you are a bull, right, you need the market to bounce within 4,300, right? Or at the max, I would say 4,278, because if it starts to break this trend line, like I told you, that would be a major trend channel bait, right? And what tends to happen, you tend to have a very downside range if the trend does break, right? So that is something to keep in mind. So yeah, let's see how we react, right? Whether you're bullish or bearish. I do think that, this 4,332 or even 4,309 could get tested, right? And then let's see how we react. We do have a lot of earnings coming up, right? Earnings season starts. So it is going to be pretty tricky to forecast. And also something else to keep in mind is that, we last week we broke out of the previous range, right? But we came back to the downside. So that would kind of be a very important level to watch, right? If you are bullish, you should expect any downside to, get over 4,390, 4,400, right? 4,400 is a must to get it back over, right? And especially the second channel they have drawn here, right? So it would be, yeah, 4,400, break over 4,400, you could have yourself a rally. Otherwise, right, this red line, right, still the primary bear case scenario in the market that I see, right? Yeah, with that being said, let's look at the dollar, right? The dollar, again, these are your key levels. You need the dollar to hold over this 105, right? This 105.7. As long as we stay over 105.7, then even the dollar, right? To the 1 hour time frame on the dollar, you'll be able to see that, this is the larger channel, right? Within the dollar. So, I mean, the first break of the channel generally tends to be the wave 4, right? So I still suspect dollar could continue making new highs, right? Except again, watch out, right? Because this did break the channel. So if you do break the support, then boom, dollar sells, then the green path on the market becomes favorable. So yeah, dollar is very important to this equation. So is the wicks, right? The wicks here, you can see kind of like, I do see, you can see this year 1, 2, this year 3 or 4. It's easily got one more high right before it rejects, and that could kind of align with the market, where the market could come down to this level and bounce, right? For the wicks to actually break out and have an impact, right, you would need to break over this 20. You can see here on the weekly, we always tend to get rejected around this 21.5, 22 area. So if you do want a more sustainable downside, you would need to break over this 20.6 area. Otherwise, that green path is still a probability. So these are all factors, to take into consideration. And also the yields, right? They're not really slowing down, right? The next target is still at 5.3%. So yeah, there's that. It's still holding on and hugging its channel. No breakdown on yields yet. Still in its wave 5. So yeah, with that being said, let's look at this week's watch list. The first one I have is actually FUTU because it hasn't really sold off with the rest of the China stocks. So I think below, 62, I think FUTU could easily retrace previous week's candle, right? And retest 60 and 58. So kind of think that FUTU is done going up for the time being. The next one I have on this week's watch list, OXY, and yeah, obviously war, right? War, and I do think this is an ABC. We could, right? As long as we stay over 64, 66 is definitely possible, but we would need to break the 66 level for a more upside move to, $70. So yeah, this is a super important level to get up there. So yeah, keep an eye, right? Kind of an inside week. Oil could take off this week. And the next one we have is again, the reason for that is I do think that, it probably comes back up to test this resistance level, right? It has progressively held this trend line channel. So as long as it, holds the trend line, right, probably pushes up to the top of the trend line. So over 220, it could possibly see 225, 230. And last but not least, I have is AVGO. Again, the reason for that is super extended. Semis do look weak. Had a super bearish engulfing, right? Rejected as persistence. So as long as it stays right below 880, 875, probably come back down to like 850, 830. So yeah, thank you so much. Hope you have a great day.